but we are still waiting for our external auditor to sign in.
Okay, well, let's wait a couple minutes. Don't we need a couple more board members too? Let me just see. Oh, wait a minute. We have more than I thought.
Kathy,
Oh,
yeah, we do have a quorum.
oh, I do see that.
Yeah.
Let's wait 2 minutes and we can always get going with the other items.
Yeah, absolutely. Since the presentation is just a report.
You can respond again. On the call. Yeah, and you can call.
Okay, well, why don't we start the meeting, get going with our other items? I don't know if we have to start with a roll call or start the record. We started the recording, so I think first thing is a roll call.
Yes. Jerry Abrahams. Phil DeFranzo.
Here.
Timothy Hodges. Catherine McKinnon.
Here.
Commissioner Perez.
Here.
Franklin Perry.
Here.
Chelsea Ross. Sarah Sanders.
Here.
We do have a quorum in attendance for the meeting.
Okay, Jerry did let us know he'd be about 15 minutes late, but he intends to join us in progress.
Great, thank you.
So welcome everyone. It's a beautiful day out there. Everything's blooming. And we have a pretty light agenda today, 1 action items and several reports, including our 2024, excuse me, audited financial statements. But the first item is a resolution for the next bond sale. Over to Hazim.
Good morning, everybody. Before you is a resolution to authorize CHFA to issue up to 350 million of the Housing Mortgage Finance Program bonds in 1 or more issuances. The sale will allow CHFA to raise additional proceeds and to fund about 1,262 first-time homebuyer loans. As of April 11, CHFA had an aggregate net pipeline of about 302 million. Based on the interest rate environment, CHFA would utilize a structure consisting of fixed rate and variable rate and expects to close the issuance in June 2025. To leverage CHFA tax-exempt issuance capacity, CHFA intends to pair the tax-exempt issuance with taxable bonds. CHFA has informed Wells Fargo to lead the second single-family financing for calendar year 2025. I'll be happy to answer any question the committee may have at this time regarding the resolution.
Any questions? Being none, I'll ask for a motion.
Make a motion. Kathy.
Thank you,
Second.
Kathy. Thank you. Any further discussion? Okay, we'll do a verbal vote. All in favor, say aye. Aye.
Aye.
Opposed? Abstaining? Since it's unanimous, it's fully approved. No need for a roll call vote. And the rest of our items are reports. Are we ready for the audit report or should we skip down to Allison Murphy?
Allison is trying to get hold of our external auditor.
Oh,
but
okay.
why don't I just give a quick report regarding our 2024 financial statements,
Oh, okay.
so that when we have our folks from Whittlesey, they can talk about the audit result. So this is just a high-level recap of the 2024 financial statements. CHFA funded over 3,800 homeownership loans compared to 3,200 in 2023. For multifamily, CHFA provided financing to support 1,200 affordable units compared to 875 units in 2023. Non-current assets increased to 5.6 billion, while the corresponding bonds payable increased to 5.4 billion. Of the 5.6 billion of non-current assets, over 3 billion were MBS securities, representing 57%. So These informations, you can find a bit more detail in the management discussion and analysis. But while we're still waiting, I'll be happy to answer. Okay, so Allison just informed me that Tom Goldfuss is calling in right now.
I was actually wondering if we could look at the income statement schedule. They had
The financials, you mean?
of the
Or
financial,
Allison's? Yeah, okay.
'cause I just had a observation.
Lorraine, can you scroll down? Scroll some more. Tell you to stop, like next page.
Income statement, yeah,
Yep. No, some more.
sorry, I just,
No, that's fine.
There he is.
had,
Bit more, one more, Lorraine. One more. Yes.
well, it's just interesting because our operating income is very good, 36.5 million.
Yes.
But then we have to recognize all these other changes in the fair value of our investments. It's just interesting because, but I just want to point out we had a very good year for operating income, but it's really, I guess, because of the interest rate levels and the valuation of our portfolio, we have to recognize.
Yeah, we have to market those non-cash.
But that can change, with the change in interest rates, like,
Absolutely.
So I think my takeaway was it was a very good year. Operating income was very strong, but our very net bottom line is, impacted by, this requirement to recognize change in the value of our investments. So that was just
Most of those items are just paper adjustments.
Right.
So, and like you said, that we don't actually recognize those as far as cash goes.
sure.
Yeah.
And look how big it was a couple years ago too. So it's just an observation, but it was a very good year. I would say for operating income. Okay,
Commissioner Perez has a question.
Commissioner?
Well, it's more of a statement. I mean, I don't disagree with Sarah's point that in general we had a good year, but I don't want people who are not accountants to discount the significance of those evaluations, because if we were to have to catch them in that specific day, we would take a loss. Now, I also
Right.
totally agree that a week from now, that could be a gain, right? Or it could be even a bigger loss. So, I mean, it does have significance. It may not have an impact on us right at this moment per se, because we're not catching it in. But if we had to, that's what those numbers tell us is that's what would be our bottom line. So I don't want people to discount to that, that's an evaluation,
Yeah. But I feel like somewhat the items above the line are within our control, and that is a little bit just market driven, but in terms of what we control, we did well, I think.
I agree.
And
I agree.
back to the
I agree.
back to the program, wherever you wanted to go next.
So we do have Tom Goldfuss from Whittlesey to discuss the 2024 audit result.
Hey, thanks, Nadine. Thank you. So thanks for the introduction. I'm with Katrina Olson. She's a senior manager with Whittlesey, and we will go over the 2024 audit results. I'll tell you all good news in advance, so nothing to be concerned about here. We're going to start with a slide of our engagement team, and we have somewhat of a large engagement team. This is the primary folks doing the audit. There's some others as well, but the main point of context here, myself and Lisa Wills are both partners on the engagement. Lisa does the concurring final review, but I'm the engagement partner on the audit. Katrina, as I mentioned, senior manager. We also have an IT specialist that does high-level control review of the systems, particularly the financial reporting systems, as well as some other associates here on the engagement. So phone numbers, email addresses, in case anybody needs to reach out during the course of the engagement or the year with any questions. Next, we'll get into the overview of the results. We've issued several reports in terms of the financial statements, the first being the independent audit report on the financial statements for the year ended 12/31/24. It's an unmodified opinion. All the reports we issued are clean or unmodified. But the report on the financial statements has been issued, as well as the opinions on your state and federal major programs for compliance. No issues over compliance or in regard to internal controls over compliance. Both of those items get tested as part of the audit. As mentioned, the IT control specialist reviewed environment and general IT related controls with no issues identified at that level. We did not incur any difficulties in dealing with management in completing the audit, as expected, as has been the case for each year we've done this. All information is received timely from management, allows us to complete our audit well in advance of this meeting in accordance to your deadlines. The government auditing standards is a report we also issue because of the state and federal funding, as well as because of the rules under the state quasi-publics. And that report looks at internal controls and compliance over financial reporting, as well as compliance, and that's also a clean report. That report would identify or would communicate any material weaknesses that we discovered during the audit, or if we'd noted any significant deficiencies, and we did not know any of those. And then finally, no misstatements were identified during our audit work, and there were no misstatements identified that were left uncorrected either. So both of those items are very important to understand. The next page are the required communications at the completion of the audit. As previously mentioned to you, we've outlined our scope of the audit and all responsibilities in our engagement letter. That engagement letter was done in 2022, which covers the 3 years, with this being the final year under those terms, as well as affirmed every year too, an additional letter. But we've met the responsibilities, and management has also met their responsibilities. There are no new significant accounting policies during the year, and all remaining policies were consistently applied from year to year. There is a new accounting pronouncement through the GASB this year that was effective, which related to compensated absences, but that did not have a material or significant effect on the financial statements. And Allison did a good job of implementing that and understanding the standard, and we had a few discussions just to make sure that it was appropriately applied, and it was. As far as accounting estimates go, the estimates were evaluated. The assumptions, the underlying assumptions to the estimates were audited by us. The significant estimates we determined to be the allowance for uncollectible receivables, the net pension liabilities, and the OPEB liabilities, as well as the fair value of the swaps. But we did not know any differences or issues in how those estimates were accounted for. Previously mentioned unadjusted or adjusted differences during the audit, which there were none. Fraud and illegal activities were not noted during the audit, which I think is important for the board to understand, but if there were, we would have identified those and discussed earlier. Previously mentioned, no weaknesses in internal controls were identified, nor were there any disagreements with management. Information is shared through secure portals during the audit. We do a combination of on-site auditing as well as remote. On-site auditing was a few days in person for a few of us, as well as we have Teams meetings and discussions as well, over the phone as necessary. We did not need to use any consultants to complete our audit, and we're not aware of management consulting with another firm to get a second opinion on anything that we've communicated. And then finally, we confirm to you that we've maintained our independence with respect to CHFA during the year in accordance with all professional and regulatory standards. Next page is some additional information to communicate. The audit and the financial statements themselves have additional components to them. The first is required supplementary information. We review this information by reading it and understanding it and asking questions. We're not necessarily auditing that statement, but we are doing limited audit work to make sure it reconciles and agrees to the financial statements themselves that are being audited. So I should clarify, an opinion is not provided on that information, but we do limited audit work to make sure it's consistent and it doesn't conflict with any of the financial statements being issued. Schedule of expenditures of federal awards and the schedule of expenditure of state assistance is also part of the financial statements. That is the state and federal awards that you receive, that we do audit. We do task work on those programs as well and issue separate reports to make sure you're in compliance and there's no findings or noted issues for that. And then the supplementary information regarding other liabilities and retirements is also reconciled to the supplementary information and included in our audit report. So that covers our basic communications, and I should say we're open to any questions along the way, but Katrina's going to take over and go into some more significant audit areas and transactions that we audited during the year.
All right, thanks, Tom. Good morning, everyone. If there's no questions, the next slide, please. As Tom mentioned, the next two slides are just some overview of the significant audit areas we looked at during the audit. First is management override of controls. You know, we do gain an understanding of the internal controls over financial reporting and other key processes. And we also perform tests. So we take some samples of transactions in all the categories you see on the screen, including journal entries, wire transfers, for example, investment purchases, and certainly payroll, cash disbursements, et cetera. So no issues were noted as a result of our testing. In terms of the balance sheet, cash and cash equivalents, we do confirm all of those balances, and we test bank reconciliations for the accuracy of reconciling items. No issues were noted there. For investments, we do also confirm all the investment balances, and we do test the fair value. One way we test fair value is also taking a sample of individual securities and looking at the pricing. For the interest rate swaps, we did rely on BLX's valuation and swap effectiveness calculations. We did also test the balances in the deferred inflows that relate to the interest rate swaps. For loans, we performed a number of procedures over loans. We compared the loan balances on the financial statements to the detailed subledger. We also performed analytical procedures over interest income. We tested the allowance for loan losses. For example, meeting with management to discuss how that estimate is calculated, and looking for any indication of bias. And we actually also tested a sample, looked at some of the detail specific loans and looked at the calculations underlying those assessments. We also did perform some internal control tests where we take a sample and look at things like the note, the signed note, and that proper approvals were performed over both single family and multifamily programs. And then finally, we do look at the servicer, the monitoring procedures that the organization is performing over the servicers. For example, sampling agreements and looking at the underlying support for the monitoring of those servicers. For bonds payable, we also confirmed all the outstanding debt, the obligations, and then we also performed a analytical tests over interest expense. And we did also look at the new bond issues and tested that the recording was correct to the general ledger. The next slide, please. In regards to the net pension liability and OPEB, we do review the assumptions used by the state's actuaries and agreed the authority's proportionate share of the actuarial valuation to the financial statements and to ensure they were in agreement. For revenue recognition, we do sample some borrower payments to test controls and perform some detailed testing over that process. And we also perform other analytical procedures. I already mentioned some of the other, for example, interest and other investment activity. We perform analytics over those. And then finally, the federal and state single audit, of course, is a significant part of our testing. For the federal single audit, for both, we perform a major program determination. For federal, our major programs were the HUD Comprehensive Housing Counseling Program. And the second major program is the Homeowner Assistance Fund. That is from the Department of Housing, but it's passed through the state of Connecticut Department of Housing from the Treasury. So that is a federal program for our testing purposes. On the state side, we had 3 major programs. One was the DECD State Portfolio Preservation, also the Department of Housing Assisted Living Demonstration, and then finally the Build for CT program, which was a significant program this year. So when we perform single audit testing, we look at direct and material compliance requirements. We also look at internal controls and performed detailed testing. And as Tom mentioned, no issues, no reportable matters were noted as a result of our tests. So with that, I guess I'll open up to any questions. And if there are no questions, we have one last slide on some technical updates.
I have a question. I got my hand up.
Yep. Go ahead, Commissioner.
With what's going on in the federal government, and in particular with HUD, and some of the changes that they want, and do you foresee anything that we need to look at or be concerned about?
Yes, I suppose. I don't know anything specific because the news keeps changing from day to day or week to week. But yeah, I think everybody who has some sort of government funding, especially if it originates through the federal government, needs to be conscious of what the administration is saying in terms of what they want and expect, what strings are being attached to any type of grant. But then you see, you see this past week, even in Connecticut, lawsuits against the administration looking to say you can't do this, or this isn't precedent or standard. So I don't know what anybody could expect at this point. But yes, in general, I think you have to be concerned about what either executive orders or requirements are going to be placed on funding. Nothing jumps immediately though to anything you're doing that would.
That's really what I meant because yeah, there's lawsuits and you win some, you lose some,
Right. So yeah, nothing. We certainly have clients that have missions focused programs that conflict with some of the things that come out of Washington right now, what they're looking to eliminate. So, but nothing jumps immediately that would expose you dramatically to anything that we've seen.
Any other questions? I think you had another slide.
Yeah, the final slide is just an update on some of the GASBs, which are the accounting standards that you follow that are upcoming. And there's nothing significant here that I think requires a lot of effort. It's more just that especially the first 2 are more just disclosure related pieces of information, which we'll certainly work with Allison and our team to decide what to implement. And then the last one here, again, I don't think anything different in accounting needs to happen, but there's probably some new footnotes or changes to footnotes to identify certain capital assets that you have. And some of those capital assets are more in the non-traditional nature, operating lease assets, intangible assets, subscription assets, particularly around technology arrangements, intangible assets, and then capital assets held for sale. So not a significant component of the business, But if you do have those, then we'll have to evaluate it and determine if separate disclosures need to be made or footnotes need to be added for those. But there's nothing upcoming that would require a significant amount of lift, I believe. Certainly nothing to the extent that the lease standard was probably the more recent standard in the last few years that affected government entities the most, which required a lot of calculation and a new way of doing things. I don't think either of these standards really impact the day-to-day how the transactions or accounting is handled internally.
Quick question with the focus on federal funding, and Katrina mentioned that you looked at federal and state single audits, and I've been focused more on our state single audit because there's a lot of information about federal funding in there that I never really focused on before. But does CHFA have to do any reporting to the feds that's like a single audit, or?
Yeah, yes, they do. They have a special report that yes is the federal single audit, and along with that, there's a filing with what's called the Federal Audit Clearinghouse. So the audit report gets uploaded to, it is a public website, Federal Audit Clearinghouse. So that is required.
And my understanding, the basic thing in the federal single audit is to talk about all the federal funding that the entity receives, and it's a reporting on it. So there might be something interesting for us to see. When is that due? Is that due in the same fiscal year for financials?
It is. It was actually finalized. We already finalized those reports. I guess I would defer to management in terms of distributing those reports to the group here, but we did finalize those reports at the same time as the audited financial statements.
So Sarah, you would like to see a copy? We can forward to you.
Yeah, I'd like to see a copy because I focused on the state's version, which has all it has a real detailed listing of all the federal funding, and yeah, I mean, I don't know if other board members would be interested, but
yeah.
Okay. Commissioner?
Yeah, I mean, while you were speaking, something came to my mind, which has to do with the low income tax credits that we oversee and that we allocate. Are there any reporting requirements for that? Because I know the IRS does an audit, right? The IRS, at least in the past.
Nothing
So
from the auditors or from us or that we issue. I assume there's something internally, but I'm not certain what those requirements are.
8610.
So the point I was trying to make, besides the reports that you guys are mentioning, there may be other reports that we do have to provide to the federal government, whether it's the IRS, whether it's, HUD, whether it's Mickey Mouse or Donald Duck, the agency. Is the point I'm trying to make.
Commissioner, with the LIHTC, there's IRS filings on a regular basis. There's a regular filing for our allocations and a whole bunch of compliance ones as well.
I'm actually very familiar with it because I have served in nonprofit boards that have done low income tax credits. So the point I was trying to make is that beyond the reports that has been mentioned in the audit, there may be other federal requirements that we have for those who may not be familiar. That's all. So it's just more of an FYI. Not that anything is wrong, not that anybody say anything incorrect.
Any other questions? Thank you very much. Another good year of financial reporting and clean opinion. Should celebrate that. Next item is financial report. Oh,
yes. So Sarah, just want to note to the committee. So this is the third and final year under the current engagement for Whittlesey to perform our financial statements audit. So within the next few weeks, we would be issuing an RFP to procure or to solicit a proposal from qualified auditors, and this is required by statute.
yes.
So just as an FYI.
And how long has Whittlesey been on board?
3 years, three consecutive years.
And I kind of remember you can go 6, but we'll see, right?
Yes, yeah. The incumbent can reapply. but they cannot exceed 6 consecutive years.
Okay,
Okay.
thank you for
Elsa?
that note.
Sarah, if I could, I was
Yep.
going to wait to say this when the audit was finished. I was
Okay.
waiting to see if there was any other questions. But look, we take it for granted that audits is great because we're used to it. But I do want to commend Hasim and his staff. As someone that looks at a lot of audits and as someone who reviews it as my profession, you know, and cites people for not having good audits, you know, he makes it look easy and his team makes it look easy because we get it year after year. But this is not an easy task because those who do this for a living or who have to review audits or get held accountable to their audits. So I just want to say kudos. I don't do that often because I don't think I need to do it often. But here's a team that gets it, you know, year after year. You know,
Yes,
I just want to say we should highlight that. You know.
thank you. I
Oh,
concur.
thank you. I think it's a team effort. It's just not the finance department. It's all the rest of the organization.
I agree.
They make
I
our
agree because if
job
the rest of the
easy.
organization don't follow their internal controls, you're in trouble.
Right.
Yeah.
But it's your job to catch it.
Yeah,
Yes.
to chase them down.
So ultimately, it goes back to you and your team. But I realize it's a team effort. My point was more that we kind of take it for granted. You know, I've been in this board now 10 years, and my prior time, you know, there was a gap. I was in the board for another 8 years, and to be honest with you, you almost take it for granted, right? And the point I'm trying to make is there's a lot of work that goes on to make that happen, and not by one individual, as you stated, by many people,
Thank you.
including your CEO. You know, that ultimately has to supervise you.
Yes.
Thank you. Okay, great. So before you are the March financial reports. On the revenue side, mortgage loan and investment interest revenue are coming in 5.1 million over budget for the first quarter and 12.3 million higher than last year. The increase in the authority's investment portfolio is driving the year-over-year variance, as the portfolio is a little bit over 848 million higher than the same time last year. On the expense side, bond interest expense is 2.1 million above budget through March and 9.3 million higher than last year. Propelling that prior year variance is the fact that our outstanding bonds are 778 million higher than the same time last year. Servicer fees are 1.7 million higher than budget through March and are slightly higher than prior year. Bond issuance costs are coming in 1.2 million over budget. The authorities had its first 2 bond sales this past February. However, we do spread that budget evenly throughout the year, so we expect that to even out as the year progresses. Administrative expenses are coming in 2.3 million below budget and 50,000 higher than last year. When you exclude salaries and benefits of 6.9 million, the current year expenses are 434,000 higher than last year. And lastly, the change in net position is above target by 3.5 million. Are there any questions?
We just the first quarter into the year. Okay, seeing no questions, let's move on to the production and delinquency report. John Chilson.
Good morning. The authority purchased 576 loans totaling $157.4 million in March. 99% of those were 152 loans total. 572 loans totaling $156 million were securitized. That is an unusually large amount, dollar and volume for a single month, and that's due to the fact that there were 2 Fannie Mae and Ginnie Mae settlements in March to make up for the settlements that didn't occur in the short month of February. But even if you average those 2 months, the average would be 373 loans totaling over $100 million for each month. So it's our 2 very strong months, consistent with what we've been seeing since the TTO program was launched. The average loan size was $273,000. The mortgage-backed security portfolio balance was $3.7 billion at the end of March, which was a $143 million increase over February. And our whole loan portfolio in February declined by 24 loans, or $3.2 million, ending with a balance of $1.1 billion. The whole loan delinquency rate increased by 1 basis point to 6.2%, and the year-over-year carrying balance of loans in foreclosure increased by $3 million to $13.9 million, when the number of loans increased by 15. Authority also funded 59 down payment assistance loans in March, totaling $670,000, with an average loan size of $11,400, and 165 time to own forgivable loans at $3.8 million, average loan size $23,300. There were no multifamily loan closings in March. The portfolio remained at 602 loans at $1.4 billion. There was one decrease in our permanent loan delinquencies from 7 to 6, and the overall multifamily delinquency rate was less than 0.5%. Any questions?
Seeing no questions, we'll move on to the investment and swap report with Nunyan Lee.
The investment portfolio has an overall increase in book value by $434 million to $5 billion, and an increase in program assets by $248 million to $3.7 billion. Quarter over quarter, the weighted yield to maturity of the investment portfolio increased from 4.22% to 4.29%. On the swap side, there's the total hedging position is $867.6 million notional. This is the same as last quarter. There are currently 41 swaps with 8 counterparties. Compared with last quarter, the weighted pay rate remains unchanged at 2.898%, and the mark-to-market value decreased from $58.3 million to $48 million. Thank you.
It's my impression that the swap portfolio has been decreasing in recent years because you haven't been doing the synthetic fixed. But I think I heard you make some comments, Hazim. You think you may need to go back and do more swaps and do more synthetic fixed to get the best.
Yes, correct. At least based on the rate environment, the upcoming deal that we're working with Wells Fargo, it would have a variable rate component, and that variable rate will be hedged with a swap.
Hazim, you do index floaters, and then whatever they're calling LIBOR nowadays, swap or
SOFR. Yeah, it's a SOFR swap. Yeah.
Yeah. So, and are the floaters that you do reset at SOFR, or are they like a floater, like a variable rate product?
Yeah. So right now, because every day is a new day when it comes to trying to determine the vehicle that we would like to pick. So the first thing that what we're trying to determine is the size of the variable compared to the size of the fixed rate. Once we solve that, or if we are able to solve that, we then have to overlay how much tax exempt and how much taxable will be available, and which one will be funded by which structure. So depending to the structure, so say that the tax exempt would in effect be funding the variable rate, then we are then looking at the percentage of SOFR versus using a SIFMA swap, and that will be more cost driven more than anything else. But we have to then first determine whether we are using the variable under a taxable structure or a tax exempt structure before we can solve the rest of the
yeah, of
hedging.
course. Yeah, of course. Right. So you first make a determination on whether you've got volume cap or not, and then that then drives what product you'll use. And
yes.
Got it. Okay. Interesting.
And can you remind me about what procurement you will use to secure the new swap? I kind of remember that you have only a couple counterparties that meet your very high credit rating requirements, but will you still be able to bid it a little bit
Yes, yes. So we do have our swap advisor, Mohanty and Gurjulo, looking at the qualified counterparties. We have about 5 at the present time that satisfy the rating requirements. So it all comes down to number one, what would be the concession, the spread that each dealer is seeking, and then just trying to figure out when would be the appropriate day to enter into the swap, because everyone is overlaying the additional cost for risk due to the fluctuation in the market. So we don't want to overpay.
Right. And you mentioned taxable, tax exempt, which makes me
Yes.
think, if our ability to issue tax exempt bonds were to go away, and we don't have to talk about that too much, but if it were, theoretically, what happens? I think our lending rate to our first-time homeowners will go up, right? We'll still be able to secure funds. We'd probably have to do taxable. I mean, could you just give me a snapshot of what that might mean?
Yeah, so at a high level, just from a cost of capital, you're looking at an increase by 1%. I think if that is the only problem that we face, it is something that we would be able to handle, at least in the short term. But if the impact of tax exempt goes away, and that also includes the impact of tax credits and all other things that associated with a tax exempt issuance, then that would create a much bigger problem, just because you cannot replace debt, or you cannot replace equity with debt.
Right. Okay, well, might hear more about that in the full board meeting. Any other questions? Okay, our last item is approval of the minutes of the Finance and Audit Committee meeting of March 27th, 2025. May I have a motion?
I'll move.
Second?
Second.
People are quiet this morning. Okay, verbal vote. All in favor, say aye.
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 Abstaining? Opposed? No need for roll call votes, unanimously approved. Any other matters to discuss? Okay, with that, a motion to adjourn, and we'll see you all at the board meeting. Everyone
Thank you.
say aye. Thank you.
Aye.
What you mean by hearing more of it?
I know.
Well, it isn't my talking.